Hello and welcome to the first weekly roundup of February. It was quite a frantic one last week because it was the last day of January, and I was hoping this week might be a little bit quieter, but it hasn't been. It's been very, very busy, and I've got quite a lot to go through today. It's just constant, isn't it? It's just constant changes at the moment. So yeah, I'll get on with it. So it's been over a year now, I think, or just about a year since the first known case of COVID arrived in the UK. Personally, I'm a bit fed up with all of this, working from home. Really miss being in the office and seeing everybody, but we're coping, we're managing, and just hope that these vaccines do the job and we can all be together again at some point later on in the year. So all of our staff continue to work from home, and apart from a couple, we have 2 people regularly in each of the offices. So Midhurst, we have somebody 2 people in a couple of days a week, and Chichester we have somebody in, or 2 people in every day. So if you do need to call into the office to drop anything off or pick anything up, then you can do so. But please call ahead. Please ring the office so that they know that you're on your way. And obviously, we've got social distancing, and please wear a mask if you're in the building. So it's been a challenging 10 months, and tax return deadline day was last week. And I'm pleased to say that we got practically all of them in. There was a handful of tax returns that didn't go in, but it wasn't because we didn't try really hard to do it. So well done to all the team for pulling together and getting all of that done. I think a couple of stragglers are being dealt with this week, so we're in pretty good shape, all things considered. So thankfully, as we discussed last time on this, there was no self-assessment late filing penalty that would be issued on the 1st of February if your return wasn't in at the end of January. They've extended the date for the penalty to the 28th of February. So if you are one of those that haven't been able to quite get the return in just yet, you do have to the end of this month before they will issue a penalty. However, you still needed to have paid the tax. The tax was still due on the 31st of January. So whilst it's good news there was no penalty, obviously it didn't make a great deal of impact to us within the office, because we obviously want to make sure that our clients were aware of their tax liabilities and didn't incur any unnecessary interest. So so taxpayers must have paid their tax by the end of January. Interest is now accruing if it's not yet cleared. If you can't afford to pay your tax, and some people are really struggling from a cash flow perspective with the continuing effect of the lockdown and the pandemic generally, you need to file your 2019-2020 tax returns. Do get those in, and then you could then contact HMRC to agree a payment plan over the next however many of months, up to 12 months. But they won't talk to you to agree that payment plan until the return is submitted. And if you haven't made your tax payment or arranged that payment plan by the 3rd of March, a 5% late filing penalty will be issued. So the late filing penalty kicks in at the end of February if you haven't filed the return, and then a 5% payment penalty on the tax that's due if you haven't paid that tax. So please do get your returns in and talk to HMRC about a payment plan, because it will save you money in the long run. As ever, get in touch with us if you need any assistance. Moving on to quite a different topic now, but one that's been we're seeing more and more of. We're seeing lots of letters for clients from the Information Commissioner's Office. And we've been sending those on to clients because it's not something that we can deal with. But many of the clients are coming back and saying, is this a scam? And when we send the notes of this meeting, we'll send the links to the Information Commissioner's Office. And the short answer is no, we don't believe it to be a scam. The Information Commissioner's Office is the UK's independent authority. It's been set up by the government to uphold information rights in the public interest, promoting openness by public bodies and data protection for individuals. So the Data Protection Charges and Information Regulations 2018 requires every organisation that processes personal information to pay a fee to the ICO, unless they're exempt. So failure to register with them and pay this annual fee could result in a fixed penalty. So if we're receiving these letters, we're sending them on to clients and saying to them they need to check whether or not they're core. So basically, if you are using personal data in your business or organisation, then this will affect you. So you need to be on this register. So the Information Commissioner's Office keep a register, and it's open and can be accessed. I had a look at it yesterday, and that shows the name and address of the organisation, the data protection registration number, the level of the fee paid. So it's a different level of fee depending on the size of organisation, the date the fee was paid and when it's due to expire, and one or two other bits of information. But the key thing is we are seeing lots of clients get this. Quite rightly, they're sceptical. We talk a lot about scams, and there's been quite a lot of HMRC scams again kicking around. There's some scams about getting a vaccination and all of that. So absolutely do be diligent and look at these letters and make sure they are actually legitimately coming from the ICO. But my point is there is that requirement, and it's relatively new, so people are seeing it for the first time. And like I said, there'll be links in this follow-up email where we'll send you the link to the government's website that talks about it, and then there's another link that takes you to the ICO's website as well. Gives you all of the information and what their role is and what they're doing. So yeah, so keep a lookout for that. You haven't had it and you do have personal data that you use within your business, you probably need to look at the website and register without necessarily waiting for that letter. So yes, so keep a lookout for that. Really important new bit of regulation. Moving on to Brexit. Again, this isn't a Brexit seminar. This is just some key things to maybe just remind you of. You may need to go and do a little bit more research or call us and we can talk you through your individual requirements. But for smaller UK businesses exporting to the EU, the new Brexit rules have been a little bit problematic, and one or two unexpected things have cropped up. So one of the things to just highlight is this rule of origin, which has created a little bit of confusion. So since the 1st of January, many UK businesses have discovered that they now face significant additional costs and handle more responsibilities on their exports bound for the EU. So it's quite complicated, but one of the things is this, like I say, rule of origin. So the rule means that any goods arriving in the UK from outside the EU, which are then exported from the UK into the EU, will be subject to customs duties. So that's all I'm going to mention on it today. If you're importing from outside the EU and then exporting into the EU, then potentially there's additional costs that you're going to incur, and no doubt paperwork and additional admin time as well. So take a look at that. On a similar vein, in terms of imported goods, there's a thing called Postponed VAT Accounting, so PVA. So what this is, again, this is relating to imported goods, and it's relating to VAT on imported goods. So this gives companies the option to account for and recover VAT on imported goods on the same VAT return, instead of paying for the VAT upfront and then waiting for the C79 to recover the VAT. So you would pay that VAT, you would then wait for the C79 to come through, and then you can then recover it. So they made that slightly easier. So if the importers based in Great Britain will treat itself as both the supplier and the recipient of the relevant goods on the same return. So there's no physical cash flow implication. An online monthly statement from HMRC will be available for businesses to download, and they must retain it. And this will show the total import VAT postponed from the previous month. The figure from the relevant monthly statement should be included on the next monthly or quarterly VAT return. So it's relatively straightforward, but again, you need to be registered. You need to sign up to use this scheme. You could do that via the government website. Again, the link will be in the email that will be sent after this, this session. These statements will only be available for 6 months. So it's really important that you download them each month and keep a copy of it within your own records, because after 6 months it will no longer be available. And then obviously if you get an inquiry into your VAT return and you can't produce the paperwork to support the figures, then that's going to be quite problematic. If you go on to our latest blogs, you'll see more detail on that, talk specifically about which boxes and things go into the VAT return. So take a look at that. Or like I said before, always give us a ring if you've got any questions on these sorts of things. If you use Xero for your bookkeeping, then there is a PVA option button that you can select when creating a VAT invoice. So the software providers have already introduced what's needed to help you fill in your returns correctly. So enough about imports, exports and Brexit. Let's move on to COVID news, COVID-19 government support news. So changes to the Kickstart scheme grant. I talked about this last week, and we'll talk about it again because I think it's really important that everybody's aware of it. So the Kickstart scheme provides funding to employers to create job placements for 16 to 24-year-olds on universal credit is changing. So far, more than 120,000 jobs have been created, and the new changes make the scheme easier for businesses to apply, which is great news. Employers of any size can apply for funding, which covers 100% of the national minimum wage for 25 hours per week for a total of 6 months. It's quite a lot of time, that. I think that's it. It's quite a lot of hours that are going to be covered. It'll also cover the associated employers' national insurance contributions and automatic pension enrolment contributions, auto-enrolment pension contributions. Employers can spread the start date of the job placements up until the end of December of 2021, so all of this year. So if you're looking to recruit this year but you're not quite ready yet, then have this in your mind that you can access it later. From the 3rd of February, so from this week, and this is why I've included it today, employers can apply directly to the Kickstart scheme for any number of job placements. So the government is removing that threshold of 30 job placements. So when we looked at it before, if you were quite a small employer not taking on many people, it was quite challenging to access it, whereas they've removed that now. It looks like it's going to be easier, so it is good news for everybody. So the grants available are £300 per job placement to cover admin costs and £1,500 per job placement for employers. So the funding is for setup costs and support the young person to develop their employability skills. Employers can choose to get someone else to do this for them, such as the Kickstart Gateway. But like I say, I think if you're a small employer, you don't necessarily need to access that gateway anymore. You could probably do it yourself. Again, look out for the email. The link will be on there for you to go and find that. The Coronavirus Job Retention Scheme. So this is furlough. We know this has already been extended to the 30th of April, 2021. You can claim up to 80% of an employee's usual salary for the hours not worked, up to a maximum of £2,500 per month. Your employees need to have been employed and on the payroll on the 30th of October. And you need to have made an RTI PAYE submission to HMRC by that point, by the 30th of November, to be able to claim for them. So anybody that was on the October payroll, providing the RTI had gone in then, and if they've been paid in October, it should have done, then you can claim furlough for those particular people. And it's flexible. It's not, when the scheme was introduced back in March, April last year, it was full-time furlough, minimum of 3 weeks. That's reduced and it's disappeared. It's much more flexible, which means that more can access it, which is great. Claims for furlough days in January must be made by the 15th of February. So you've got 2 weeks after the month end to get that claim in. And you can no longer submit claims for periods ending on or before the 31st of October. So if you did furlough then, you've missed the opportunity to claim that back, sadly. talk to us on that if you want to. We can help you with the cash flow planning as far as that goes, work out what the claim's likely to be and plot that into a cash flow to see if that's going to be something that's beneficial for you. HMRC are going to publish details of the businesses that have claimed under the coronavirus job retention scheme. I'm not quite sure what they're going to publish, but there's going to be something published. If you don't want your information to be published, you can request to HMRC that they don't publish the details of your claim. You need to be able to show evidence that this would result in a serious risk of violence or intimidation to you or anyone you live with, or an individual associated with you, your business, or anyone living with them. So any employees or who may have been furloughed or whatever. So examples of individuals associated with your business include an employee, a director, officer, or an employee of that company, a partner, officer, employee of a partnership, a member or employee of a limited liability membership, or a trust, settler, and beneficiary of a trustee, settler, beneficiary of a trust. So yeah, just be aware of that. If you've made a claim, it's going to be published. Some details are going to be published. If you don't want it to be, then you can request that that isn't done. And again, there'll be a link in the email for this, and you'll need your employer government gateway ID and password. So you'll need to be able to log in. And again, I don't think it's something that we can assist with. You'll need to log in yourself to do that. So take a look at that. I've talked about in a previous session that HMRC's National Minimum Wage Unit are going to be tasked with reviewing the coronavirus job retention scheme grants. And HMRC are encouraging you that if you've overclaimed, you made a mistake, or somebody came back from furlough and the system didn't catch up or whatever, HMRC are encouraging employers to pay back any grant that they've incorrectly claimed. Or if you do not need the grant and want to make a voluntary repayment, you can also, they're asking you to do that. You can either correct it on your next claim, so your new claim will be reduced and you'll need to keep a record of the adjustment that you've made for 6 years, or you can contact HMRC and get a payment reference number and then just make a payment straight back to HMRC within 30 days. You can only do that if you aren't making another claim. So if it was a one-off claim that you claimed you misunderstood, you claimed too much, and we are seeing people where we've not done the claims for them, but they've claimed perhaps 100% of salary rather than the 80%. Those sorts of mistakes may well have happened. You can voluntarily pay that back. Again, there is some help on the government website about that, so do take a look. And yeah, there will be doing reviews going forward, so it's in your interest if you think you've done it wrong to pay it back. Okay, Companies House. So Companies House have already extended the filing deadline for companies. They added another 3 months for all companies back in the summer. That does come to an end at some point this year. It'd be interesting to see whether or not they continue to extend it, but at the moment we're working on the basis that it goes back down to 9 months in the summer. But they've also paused voluntary and compulsory strike-off processes for 1 month. So from the 21st of January to the 21st of February this year, so the next month, another 3 weeks, they won't be striking off any companies. So the compulsory strike-off procedure often happens if you've not filed your accounts, if you haven't filed your confirmation statement, you get various warnings, and then Companies House move to strike the company off. So if you are in that position and want to get your accounts up to date and submitted, you've got a little bit of time on your side to get that in. But also voluntary strikes off if your business, your company has come to an end. All your creditors have been paid, there's no need for the company anymore, it needs to be struck off then and wound up. Those are also being paused. So the reason for this is that Companies House have reduced the number of staff in their offices to become more COVID safe. So that led to delays in processing correspondence, documents and forms. So they've temporarily stopped the strike-off procedures to enable them to do the other things, I guess, that perhaps are slightly more important. Companies House will continue to publish first Gazette notices for voluntary strike-off applications. So if you are in a position where you want to strike your company off, you can still put in the application, and that will be published in the Gazette. But they won't publish the second Gazette notice and strike companies off during this period. So you can start it, but it's usually a couple of months for the company to be struck off from when you put the form in. It's going to take an extra month in the next few weeks. If you are behind because of COVID and need to get things up to date, gives you a little bit of time to do that as well, which is one of the other reasons that they've cited. But I think it's probably more to do with the fact that they're perhaps are slightly understaffed because they need to be COVID secure. You should be filing other things as normal, though. If your confirmation statement's due, if you've made changes that require filing at Companies House, you should continue to do that. Most things like that get filed online and appear almost instantly on the register. So you should still be doing those sorts of things. But if they are late, the penalties will still apply. So self-employment income support scheme grant, as I've said over the last 3 or 4 sessions, the third grant application date was last week, so that's now closed. Details of the fourth grant will be announced on the 3rd of March, so another month, and they'll be announcing the details of the fourth grant. Coincidentally, the 3rd of March is budget day as well, so no doubt there'll be lots of information flying around about that. HMRC have published more guidance about eligibility to claim on these grants. And it might be similar to the coronavirus job retention scheme grant, trying to give more detail about who's eligible and who's not. And then if it's been claimed incorrectly, you've got the opportunity to do something about it. So to be able to claim the grants, you need to be trading but have been impacted by reduced demand to coronavirus, been trading but temporarily unable to do so due to coronavirus. And it was quite ambiguous as to what those terms mean. So on their website now, they have given some detail and some examples about what impacted by reduced demand mean. So for example, you've got fewer customers or clients than you'd normally expect. You have one or more contract that's been cancelled and not replaced. You've carried out less work due to supply chain disruptions. So talking to a client of the week, and she's open, she's in retail, so she's not open right now, but she was open during the period before now, but not able to get what she needed from her suppliers. So that's impacted her business. You must not claim if the only impact on your business is increased costs. So if you've carried on trading and your income's maintained the same, but you've had to purchase face masks, cleaning supplies, maybe screens for counters and things like this, that's not reduced activity capacity or demand. So that's not covered. So the other thing is you've previously traded but are now temporarily unable to do so. So this is quite clear, I think, in some instances, the business has had to close because of government restrictions. So if hospitality and retail, absolutely clear cut, we've had to close. It may also apply to you if you've been instructed to shield or self-isolate in line with any NHS guidelines and unable to work from home. If you've tested positive for coronavirus, unable to work and you're self-employed, then you can claim this grant. If you cannot work because you have caring responsibilities, for example, as a result of school or childcare facility closures, you've been impacted by the virus and you can claim the grant. So it's quite specific there, but does, I think, give a bit more clarity on that. And like I say, within the government website, they give specific examples. So they talk about a cafe owner having fewer customers, she's eligible to claim. A plasterer can't get materials due to supply chain issues, they can claim. Where that plasterer perhaps couldn't get materials due to supply chain issues due to coronavirus, reduce the amount of work he complete and be paid for, but he manages to find a new supplier, then obviously he can't claim. So yeah, so have a look if you're unsure about whether or not the claim that you've made was fair, there's some examples there on the website. So just as I always do, a final roundup of some key dates for you. So 15th of February, January furlough claims to be in to HMRC. 1st of March, domestic VAT reverse charge for construction services starts. We are recording a question and answer session next week on this. So that will be circulated to those that it affects and will be on our website for people to look at. Keep an eye out for that. If you're within the construction industry scheme, chances are you're going to be caught by this. 3rd of March, big day, 3rd of March, 5% penalty if you've not paid your tax. Details regarding the full self-employment income support scheme grant will be announced, and budget day. So lots going on first week of March. So I'll be doing this check-in on the 5th of March, touching on the key developments that week. That's probably going to be quite a long session, so apologies for that in advance. The following week we'll probably do a more specific, detailed one on particular topics over the course of that week. And then finally, 31st of March, pay last year's VAT. So if you deferred any VAT last summer because of lockdown and you're worried about your cash flow, that needs to be paid by the end of March. And if it hasn't, you need to have agreed, if you can't pay it by the end of March, sorry, you need to agree a payment plan with HMRC to pay that over the next 12 months if you need it. Again, go online via your own government gateway and you should be able to do that, arrange that online. If not, give them a call. And then the other 31st of March deadline is deadline to apply for a bounce back loan or a Sybil's loan if you've not already had one, or if you want to top up. So if you might not have taken the full entitlement to that loan, those bounce back loans are linked to a percentage of your turnover. You may not have taken all of it. Now that lockdowns lasted longer than perhaps we thought it would, you may need to reconsider your cash flow requirements. So that's it from me for today. Quite a lot covered there. So apologies, it was probably one of the longer sessions, but hopefully there was something in there that was useful. Thank you, and look out for that email with all those various links to various things that you might need to follow up. Thank you. Bye.